Okay, oil, like a mini oil crash, but is it gonna lead like an actual oil crash? Because we're getting a strong dollar. Oil could be in trouble. Oh no. So I'm gonna show the dirtiest way ever to short oil. There's a couple of like contracts of ETNs that have they're triple leveraged, plus they have daily compounding to the downside, plus they have monthly futures rollovers to the downside, plus you can do like leverage long term puts on that and like get all kinds of downside if oil crashes. It is, yeah, it's a life hack. And if the oil trade sets up, it's going to be crazy. This is Brian Lewis with MMT Investing. Please smash the like, share, comment, subscribe, turn on notifications, all that stuff. Yeah. Okay, so we had a little mini oil crash, which is pretty cool. This is the DXY, the dollar index, kind of versus the euro and a couple other currencies. And almost everything in the entire market went vertical when the DXY pulled down. And I showed in my last video that the oil didn't really care that much about that huge down move. Um, yeah, that massive down move in the dollar was just like this tiny little up move in oil, and it's backtesting. It's backtesting its bull channel line. So I was saying yesterday that this kind of looks dangerous, and like we might, if we come down to this trend line here, like the 60, then oil's in big trouble. I didn't even consider actually shorting it because oil's been bulling forever. But now I am, and this is like one of my favorite shorts. If it sets up, is to short like UCO or USO, but UCO is crazy, and I'll show you. I'm show you what I'm talking about here. But um, yeah, the UCO is like a leveraged kind of a daily. What am I doing here? It's kind of a yeah. Wow, holy crap! Oil just like rained. That is a big red crayon. Okay, so let me get out farther and just show oil. But UCO is it's like the WTI crude. This is so ridiculous on auto because of that negative thing that oil did. All right, so wow, holy crap. Um, wow, I looked at it yesterday and I didn't even consider shorting it. All right, so what oil has been doing for a while here is um, we've been in a down channel since 2008. And every time we get into this down channel, every time we start breaking out of the top of this, oil kind of gets in trouble. And I'll show you the dollar and oil, and then I'll go into the trade setups for UCO and like how to short oil if this is happening. And it looks like it might be. Like oil, if it crashes, can just completely cross this channel like lightning. Sometimes it'll pull into the channel and they get fuzzy. Um, Sometimes it'll just pull back into the channel. But most of the time when we get up here out of the channel, oil gets in trouble. And so we had this crazy bottom and this negative thing, and we're kind of picking up support down here. And oil's been bulling real fast, so uh, a short on oil has been a really bad idea for the past year or so. But right now, if the stock market is pulling back, and if the dollar is going strong, then oil could get in big trouble, and that is definitely falling off of the bull line there. Like that definitely broke the bull line. So I think oil's in trouble. Let's take a look. I don't know like how much trouble, like if it would cross the whole channel or something like that, but let me show you the strong dollar moves and show you exactly what oil does every time. So I'm going to need a longer chart. Let's go weekly. Alright, so here's what's up. Since the 2008 kind of crashed down here, like strong dollar move in 08, 9, 11, 14, 18, right? And this is a COVID thing in 20, whatever it was, like Feb 20. See, 8, 9, 11, 14, 18, right? Those are every time that we had a strong dollar reversal. And now look at what oil did every time that we had a strong dollar reversal. It makes it look like it went to like negative 1,000 or something. Those futures contracts like traded negative for a day. Um, but yeah, anyway, check it out. Here's 8, 11, right? 14, 18, the COVID thing in 20. But each time we get a strong dollar reversal, it knocks oil into this channel and sometimes knocks it across the channel. So now we're sticking our nose up out of the channel and we're getting that strong dollar reversal, and oil just broke down off of its bull line. So that could be dangerous. Like you can see here, it just kind of pulled into the channel, then kind of got on top, and this is a lot of time passing. That's like a whole year, right? So something like that could happen. It could just come and mess around on the top of the channel. It could pull into the channel. It could freaking rip all the way across the channel. But time to start investigating oil pulling down. And here's the way that I do it. So USO, like the United States Oil Fund, is like a 2x levered kind of day trading fund, and UCO here is the Pro shares crude oil. And let me go out on a long time scale and explain what this thing does, because it's absolutely insane. So every time, wait, there's more to this chart. Give me the rest of it. What's going on here? Every time oil crashes, this thing like crashes exponentially down. Like it goes from like 10,000 to like 200, and then this is the huge oil rally, and it's just kind of going sideways, and then the big oil crash, and it goes from 500 to 8. And this is our huge oil rally here. It didn't get anywhere near the highs. Like oil went all the way back to the highs. This thing didn't even get halfway up. And I'll explain why it's doing that. It's because this is a levered day trading fund that it compounds every night, and it resets up as a levered day trading fund. So every night it loses percentages on compounding. And like during the day trading session, it tracks oil really well, but it loses a chunk. It loses percentages overnight, and it just like chips away at the value of the thing on a longer term kind of chart. So like a long-term short on this thing, like the longest puts you can get, like 3-year puts, are the coolest kind of, it's like a trick. And it's futures, it's oil futures. And so these things, every month when the oil future contracts roll over, that also hits the fund negatively. So like holding this thing long for like a long period of time would be super dangerous. But holding it short over a long period of time is pretty safe, because it has a really hard time getting up, and when it crashes, it freaking exponentially crashes, because it's triple levered and compounds and has futures rollovers all fighting it. And then if you do like a put, then you're doing like a levered like put option on top of all that stuff. Like this is the craziest short if you can get a short set up on this thing. And where is it now? It's 60 or something. Like this thing can crash below $1 easily and never make it back up. Like this thing is insane. UCO. So that's kind of the look at the oil crash. It just put a huge, like the actual oil chart, just put a huge, red candle. And so it's gotta bounce from that. It's gotta bounce from that. It may try to get up and backtest this channel again. So I'm going to be watching it, and I'm going to be trying to figure out a short entry into this thing. But I would imagine that this thing is going to rally a bit from there. Like it's not going to drop vertically, like forever, probably. Oh my god, if it drops vertically and I don't get an entry, I'll be so sad. But yeah, anyway, that's it. Like oil's busted off of its bull line now, and it's floating out here above the channel. So yeah, shorting it to the channel is not particularly scary. Shorting it into the channel, like how far could you go if it starts getting in there, would start getting a little bit questionable. But it would probably just flag sideways if it got like to a resistance point. And then I guess on the macro, so yeah, if you go back out, sort of the macro idea, like the dollar is loosely based on oil. It's like the petrodollar system, where all the oil in the world is priced in dollars. And so oil somewhat backs the worldwide dollar system. And every time the dollar goes strong, oil goes weak. And it's been in this channel, right? So it's pretty slow moving. You know, these are whole years, these moves. And puts, you can only go out like 3 years or something like that. But yeah, so the idea on the puts would be to put UCO or USO. I like putting UCO better because the triple leverage is like more ridiculous than USO. But I would be looking at like a January 2023, like the longest dated put you can get, and you wouldn't have to strike that low. You just get a long dated safe put, strike a little bit, you know, slightly out of the money, something like that. That's what I would be thinking on this. And if it just kind of gets volatile and wobbles and stuff like that, UCO will be dropping and not making it back up. Like oil can make it back up, and UCO won't make it back up. So that's the kind of idea, just to take advantage of the structure of that. It's like an ETN, I guess, like a exchange traded note, or like an ETF, whatever. The UCO ETF or ETN, I can't remember. But yeah, that's the best way that I know to take advantage of the structure of that thing, because you can get the triple leveraged, you know, at plus the compounding, plus the futures contracts rollovers that are inside of there, plus if you do puts, you get a leveraged, you know, put. So I mean, it's like max freaking leverage to the downside. And the only problem with that scenario is that we may be switching into inflation, and we may be getting towards the top of the everything bubble. So sort of on a macro level, like energy should start bulling near the top of the bubble. So like the macro doesn't really say that this should fall necessarily, or maybe one more pullback before it really starts bulling. But that is kind of concerning. But whatever. I mean, you know, macro and theories and stuff, whatever. You just look at the chart and see what it's doing. So right now it's falling down off this bull line, and who knows what it's going to do next. But I believe this thing that went for like whatever it was, like several months, 5 months or something. I believe this bull line's dead now, and maybe we get like a head and shoulders kind of pattern. We're getting up here and then up, down, up. So probably somewhere around the top of this left shoulder, when oil is hitting like 63.5, is probably the spot where I want to open a very long term put that's not too far out of the money. That's kind of the thing that I'm looking for on oil here. Yeah, anyway, that's a look at oil. I don't think anyone's thinking about oil. Everyone's talking about tech and meme stocks and everything like that. And I'm talking about like miners and minerals and oil and stuff like that. Nobody's interested in it, but that's the tech, and the growth is rotating out now. We're getting near the top of the everything bubble. Tech and growth are rotating out. The treasury bonds already rotated out last year. Tech and growth are rotating out now. And it's going to be the minerals and commodities and metals and miners. Those are what are rotating in, and then energy is supposed to rotate in after that. But I don't know if oil really counts as energy because it's so weird and it's so tied to the dollar. Um, but I don't know. Maybe some green energy stuff would be really cool a little bit later. Um, but yeah. Anyway, that's kind of the idea, and I'll explain the sector rotation a little bit. So we had a pullback. We rejected off the bottom of this channel here, and so you can see the S&P is just kind of bouncing sideways a little bit up here, right? But if you go look at the Qs, like the big tech, you know, the Nasdaq, where is the Qs? You can see you can see that it's actually bouncing downhill, and it's starting to droop, and you can see the necklines like drooping and pointing downhill. And so like it was a leading sector up to here, and it's been a leading sector to the downside. So it looks like this is really the top on big tech and growth, and it looks like we're rotating out, and it looks like we're going to have a little pullback. And once the pullback is complete, then tech and growth should be a trailing sector, and it should be not dead, but it should be weak. And so I was talking about on the Qs, what am I doing here? ARK, right. So that's the Qs, but if you look at ARK Invest, it's the same chart, but it's even weaker, right? So the downside's exaggerated even more on ARK than it is on the Qs. So I look at the S&P chart to figure out what the market's doing, but you got to find the things that are sort of leading the move. And so ARK really looks like it's leading this down move. Like I can't find anything that looks uglier than ARK right now. If the market pulls back, like, oh, Tesla maybe looks as ugly as ARK. See, but Tesla isn't like following the market. So this looks like a similar chart, and it does look pretty droopy. And maybe Tesla even could even pull back harder because not only is tech rotating out, and Tesla looks like it's following the tech rotation out, but also like if it's popping, it's freaking meme bubble right now. The short squeeze, like there's no more shorts on Tesla. I think the short percentage is less than 5% or something now. Maybe it's going to grow if it pulls back, but I have like 420 as a pretty obvious downside target on Tesla here, where we had a huge huge consolidation. And so a market pullback, Tesla comes down to 420. So that's what I have a small put position striking about 450 on Tesla, wherever that is here. And it's like out to May somewhere. Yeah, so my put on Tesla is like here. I struck like 450 out to May. And I'm looking for just a vertical move down like right now. And then ARK is a much bigger position for my short. This is like my main short position because it really follows the S&P really well. So I feel like reading the market really translates into what ARK is going to do, and maybe Tesla follows it, and maybe Tesla doesn't follow it and just like slingshots up or does something crazy. I mean, Tesla's just like one stock. ARK's a whole fund of all the big tech and innovation stuff that I think is rotating out. And then, so what's not rotating out? Like IWM is not rotating out. It's bouncing stronger than the market. It's barely pulling back. And so that, I think when the market pulls back, is going to be a strong move. Like the big tech and growth is rotating out, but there's no big tech and growth in the IWM. That is the Russell 2000 small caps. And so those are the non-techie stocks that look like they're still probably going to be pretty strong up the bubble. And then the sector that's rotating in, this is my favorite. This is the momentum leader for the miners and minerals. It's Freeport-McMoRan, and it's been bulling since the COVID crash, and it's a ridiculously strong bull chart that's pretty tight. This is a really good chart, and I got stopped out of there. I was trailing this thing really tight because I think the market's going to pull back. But yeah, Freeport is my favorite stock. I think now if tech is rotating out, like this is what's good. This is what's rotating in and should lead the market to the top. And this is the big momentum leader in that whole sector. And then, you might see some little miners and mineral stocks like Load, like Comstock Mining may start popping, or we might start seeing like silver kind of picking up with the market. Like silver miners like AG might start popping. Although this chart is kind of hard to figure out what's going on. I mean, I think this maybe is just a flag, but we're looking to pick up some kind of bull, bull market bubble trend line, but I don't think it's happened yet. I think we're just flagging around and maybe consolidating down a little bit. So when this thing kind of consolidates, it looks like it wants to go back down here. Maybe that is a spot to look for, like around 15. over here in a week or two might be a good spot, and if it starts hopping uphill, um, anyway, I think this thing's going to pick up. I don't think it's picking up today. But yeah, anyway, that's the idea. Like IWNs, FCX, oh, and Bitcoin for sure. And Bitcoin, when it started bulling, was completely ignoring the market. I mean, the stock market was doing those two huge chops, and Bitcoin was like, whatever, I don't care at all. It's just picking up the bull trend line. But now these pullbacks happen right with the market, and so now Bitcoin is reacting to market pullbacks, but it's still really strong. And it looks like it'll bull out to the top of the bubble just fine, and who knows what it's going to do after that. But yeah, if the market pulls back, who knows? Bitcoin could pull back to 45, could pull back to 40. I don't know how far the market's going to pull back, but it's possible it sticks a dart like lower than that. Like anything lower than 40 would be like freaking get it if it did something like that. Because it probably slingshot right back up here to like 100 or something. That's what I'm thinking on Bitcoin. But pretty much all of these, like, IWM, FCX, and Bitcoin, they're all really strong and they're all not really pulling back that hard, but, don't want to enter them before the pullback. You want to enter when it's going to slingshot. Oh, and not investment advice. As always, just some smooth-brained entertainment scenarios. Yeah, and that's probably enough on all that stuff going overboard. But I've wanted to short UCO for so long. I'm watching it bull, and like there's no really good leveraged way to go long on oil. That's kind of a boring long position, but shorts on those UCO and USO are so cool. Like long-term puts. I missed it last time on the COVID crash, and I just watched it exponentially fall, and I'm like, no. But I'm not gonna miss it this time if it sets up, and it looks like it's gonna maybe do a head and shoulders and then take a dive. So that's the idea with UCO. So yeah, happy trading and oiling.